So it's website, the domain, inbox, the domain, and the client list. Let's just keep it simple. You need to own it, right? Bottom line, you need to own it, right? You need to go to GoDaddy right now, get a domain that's yours, pay for it. It's like $50 a year. Then use that domain, go over to Gmail, set up a Gmail, put in that domain. So that is the email address that is communicating with your clients. And then in that same Gmail, you can open up a Google Sheet, start putting all your clients into there, or sign up for an independent CRM like BluMortgage. Obviously we have a little bit of a bias there, but point being, you need to get these things independent so that, hey, when you start seeing these warning signs, if you are in this situation, say, no problem, I can just change and I don't have to go to a brokerage and say, hey, can you port my email? And hey, all my clients are going to this website. Can you tell them to redirect them over here? Not only is that expensive and a lot of work, but also they just might say no. Right? And now you have to decide what's more important, getting off this sinking ship or maintaining the website and the email that all my clients know. It's not an easy question, right? Because, maybe you're going to hold on to hope that maybe actually this ship isn't sinking and you just don't want to be in that situation, right? You don't want to be held hostage to that. So own your domain, own your website, own your inbox, own your client list, and you can set yourself up for success in any situation as it comes up, even in these tough type situations. Hello, everyone. Welcome back to another episode of Mortgage Tech Talks. I'm your host, Tom, of course. Today, we're going to talk about a bunch of stuff. I'm going to kind of break down a video shot by Ron Butler over the May 2-4 weekend. He's just hilarious, but it's also just a very insightful video, and I give you my take as well as the tech spin on it. So that's a really interesting story, and I think everyone should listen to that one if you are a mortgage broker in Canada. Right after that, we get into a little bit of activity that I'm seeing online from some big tech players, specifically one big tech player. Some of the interesting insights that come out of it, I think just for any, again, mortgage brokers out there, it's great insights, but also, what does it mean for the bigger tech picture? And finally, a little bit of a recap of recent award nights and, shout outs to the winners. No spoilers there, but it's a great episode. We'll see you on the other side. Okay, let's get right into it here. So a couple things I want to unpack this week. Let's get right into it. The first one, it was actually a video that I saw this past weekend, the May long weekend. So you guys might be seeing this a couple weeks later, but it was a fun video and I want to just kind of comment on it. So the video was done by Ron Butler. I think a lot of people maybe listening are familiar with Ron. He has a much more successful channel and both YouTube and podcast than we do here. But and so he's our inspiration, so to speak. But no, he does a ton of great content, and usually it's for the consumer. Usually he goes out and just says something about the market. This one, literally the title says for Canadian mortgage brokers only. So I'll just kind of share my screen. I won't play it because I don't even know it'll come through, but just so you guys can see it and what I'm talking about. So yeah, this is him. It's already got 27,000 views for Canadian mortgage brokers only, like I said. And he just kind of talks for, I guess, what it is at about 9 minutes here. So yeah, won't play the video, wouldn't even come through. But really what he talks about, I'll summarize it, is he just basically says what you should do or what you should be thinking about should your brokerage, the brokerage that you hang your license on, go into receivership. So receivership, bankruptcy, solvency, they're all kind of these intermingled terms. Obviously, they mean different things technically, but point is basically they run out of money. And so, yeah, he goes on to talk about, hey, if you're with a big group or a big network, probably not something you're going to have to worry about, but there are a lot of independent shops out there. And if you are part of one of these independent shops, you need to be careful because, hey, if your brokerage goes into receivership, so they run out of money, it's very possible that you're just not going to get paid, right? The reason that is because ultimately the commission that you earn for doing deals and doing deals with lenders, that contract that obligates the lender to pay you is not between you and the lender. It's actually between you and your brokerage. Sorry, it's between the lender and the brokerage, and then you have your own contract with the brokerage. And so should that happen, your brokerage run out of money, it goes into receivership. Whoever receives it, whoever is going to be taking over the assets, which was that brokerage, will say, lender, keep paying me, but hey, I might not then distribute that to all of my agents because I have other obligations to make, right? In receivership, there's a hierarchy of people who should get paid first and, preferred shareholders, debt holders, there's a whole list. I don't know it all personally, but point is, you might be a bit lower on the totem pole. So the lender still might pay the brokerage or whoever owns the brokerage after a whole process, but then the brokerage might not turn around and pay you because they have other obligations. So it's a pretty dire, I guess, warning. Ron's good at that. And, I think it's something that everybody should be thinking about, especially in today's environment. And so, yeah, I thought it was a good one. And if anyone's listening, absolutely take a listen to this. The point that Ron made at the end really is to say, okay, if you're seeing warning signs, if you're already getting delayed, getting paid, hey, there was a computer glitch, we'll get you your commission next payroll cycle or whatever it might be. They're spending lots of money on things that maybe these are your broker owners are spending lots of money on things that maybe you don't think they could actually afford. Pay attention to those warning signs. And really, if you're seeing them, just get out, right? So just, hey, no two ways about it. Go make that transfer, get into another brokerage, because it's much easier to do that now than waiting for, hey, the crap to hit the fan. And it gets much harder to do that transfer from brokerage A to brokerage B when there's a lot of other things going on. So if you feel that you are on a sinking ship, so to speak, better get that life raft now, get out, and just at the end of the day, it's ultimately for your business, the thing that's going to pay for the meals for your family. And so, hey, if you can, just get out. So all that to say, what's the tech angle on this? I mean, it's a great video. I recommend everyone watching it. But the tech angle, I would say, is just, okay, why would you not get out? What are some of the hurdles? And for a lot of people, some of the hurdles are the tech side of things, right? So this is something we've talked about a bunch on this channel, but I'll just reiterate it. I'd say there's three big things that people think about when they think about their brokerage and what the tech that they can provide. There's probably more, but these are the ones I can think of right away. Number one is your, I guess, domain, right? The whatever.com. So if you have a website, really, that's one thing that a brokerage can provide. The website and the whatever someone types into the URL and hits go, that could be a brokerage owned one. Number two is the inbox, right? So sometimes those things go hand in hand. It could be, brokerage.com is the URL, and then tom@brokerage.com is the inbox. That's number two. And then number three is, more the client list, right? So the world we play in, something like a CRM, which just lists all your clients, all the interactions you've had with them, their renewal dates, all the things that are really the goal of your business. So those are the three categories: your website and the domain associated with it, your inbox, and again, the same domain associated with it, and then the CRM. And so with all this to say, where it comes back around is to say all three of these things. If you're listening to this, write these down, all three of these. So it's website, the domain, inbox, the domain, and the client list. Let's just keep it simple. You need to own it, right? Bottom line, you need to own it, right? You need to go to GoDaddy right now, get a domain that's yours, pay for it. It's like $50 a year. Then use that domain, go over to Gmail, set up a Gmail, put in that domain. So that is the email address that is communicating with your clients. And then in that same Gmail, you can open up a Google Sheet, start putting all your clients into there, or sign up for an independent CRM like BluMortgage. Obviously we have a little bit of a bias there, but point being, you need to get these things independent so that, hey, when you start seeing these warning signs, if you are in this situation, say, no problem. I can just change and I don't have to go to a brokerage and say, hey, can you port my email? And hey, all my clients are going to this website. Can you tell them to redirect them over here? Not only is that expensive and a lot of work, but also they just might say no, right? And now you have to decide what's more important, getting off this sinking ship or maintaining the website and the email that all my clients know. It's not an easy question, right? Because, maybe you're going to hold on to hope that maybe actually this ship isn't sinking and you just don't want to be in that situation, right? You don't want to be held hostage to that. So own your domain, own your website, own your inbox, own your client list, and you can set yourself up for success in any situation as it comes up, even in these tough type situations. Okay, so that's the first one there. The second thing I want to talk about is just actually something that I thought was, pretty interesting. There's a lot of big tech players in the space, of course, in mortgage. But one of the biggest ones, or at least one of the oldest ones, is Filogix. And I've been really impressed with them lately. They've been really active on social media, I think recently so. As someone at Filogix can correct me if that's not the case, but from my perspective, I'm seeing quite a bit more activity. And one thing that I've really enjoyed, and I'll pull up each of them here, is they kind of do like a market report, which is kind of cool. So they did one in February and they did one in May. Let me just share my screen here. So this is the one they did in February. They talked about a market overview. And really, they just kind of go through. They say, okay, where there's the calm before the storm, there's a storm, and then there's the storm surge. There's these three parts. We had the calm before the storm, which was basically from 2019 to 2022. Now we're in the storm right now, and that should let up maybe in the second half of this year. And then there's the storm surge, which should hopefully mean that we're getting a little bit of reduced rates, inflation stays under control, and we aren't going to see a huge increase in mortgage payments. So this one was a cool one. I liked it. They have this really cool chart. If anyone's watching, they can see it here. If you're listening, we'll include the links. But basically, they talk about, hey, Bank of Canada policy rate, where is it? So I think right now it's like 275. And what does that mean in terms of increase in mortgage payments? I assume over the next year or so. So 275, it's still like a 35% increase in mortgage payments. It's quite a bit. And they're hoping, hey, maybe it'll get down to 2%, which would mean closer to a 20%. And then, hey, worst case scenario, if we have to ratchet this back up to 5%, let's say. So we're at 275. So it's actually adding back another 225 bips of interest rate. It's going to be a 70% surge in mortgage payments, which would be a lot. It would be a big hit for a lot of people. One thing at the end here, it says, hey, let's hope that inflation doesn't rear its head again. Without going too far down that rabbit hole, we did get inflation print. Core inflation is back up. It's ticking back up again. This is kind of the most terrifying thing, I think, for anyone who's holding a mortgage right now, is seeing that inflation number go back up. Equally terrifying for the Bank of Canada, who has to really, between a rock and a hard place here, has to decide between providing relief, as we talked about, for all these people facing big mortgage payment increases and trying to continue to get inflation under control. So don't envy that job, but that's kind of what we're staring down here. And then that was the February report, and then here's the May one. I won't go into maybe as much detail because it's actually a little bit more nuanced, but they talk about actually how many submissions per deal, right? So if I'm a broker, I might say, hey, I have a deal. I'm going to submit it to lender A and lender B. And really, the whole point of what they're saying here is it's more for a lender audience to say, hey, how do you minimize multiple submissions, right? Because if you're the only lender that is receiving those submissions, then you're going to have a lot more efficiency, right? You're not competing against. So how do you make sure that your lender or your group is the group that gets only one submission? How do you prevent brokers from saying, hey, I'm going to submit to you, but also this other lender just as a backup? How do you really get competitive? One thing they talk about is interest rates, but it's actually not the biggest factor because usually interest rates are pretty competitive between similar type lenders. They talk about other more qualitative type measures, like response time, like service, things like that. So interesting article. Won't go into maybe as much detail there, but I think this, just to kind of conclude this point, is first of all, great to see, again, Finastra Filologics getting out there. I think that, it's only going to serve the industry to get more information out. But it's interesting to see these reports. One is probably more general audience, the February one talking about the market. But then the May one is very much so a lender audience. And so it begs the question to say, for mortgage tech, who is your customer at the end of the day? I think it's an interesting question. And, for different people, they might have different questions. Because if you look at something, I'll just use Filologics in this case. Well, they service the lender, right? Lender's actually the one that paid them. We did an episode on that last week. Lender's the one that pays them. They obviously service them, giving them deals and analytics and things like that. But they also serve a brokerage, right? They allow for centralization of information. They serve the brokers, right? It allows them to actually log in and submit and do things. And in some cases, and other, maybe more Filologics' competitors, but yeah, I think actually even Filologics through their platforms like Pro, they also are serving the consumer, right? The one actually getting the mortgage through the portals and the online applications and different things like that. So it's kind of this crazy thing where you are servicing, at the end of the day, 4 different parties under one software. Again, it's the lender, the brokerage, the broker, the consumer. Where do you focus, right? What's your focus at the end of the day? And so I think that's interesting. I think the Filologics, when I see this, say, hey, we are really serving the lender. And, I think that's a very valid strategy. At the end of the day, the lenders are the ones that are paying for this software. And so it probably makes sense to service them and maybe optimize your platform for that. But then again, on the other side, hey, if brokers just don't use your platform, then the lenders don't really care as much, right? So maybe you do need to focus on the broker. So it's always, I think, this game of cat and mouse that these platforms have to play of who am I servicing? Where do I want to dedicate my resources? But in this case, it's looking like lender, and we'll see how that turns out. Maybe lenders will want to put maybe, I don't know, better I guess, availability or better response times, or perhaps better commissions to the platform if the platform's Filogix is providing better service to those lenders. So we'll see how that all plays out, but I think it's something to absolutely pay attention to. Okay, to wrap up, there's been a couple awards over the past couple weeks, and I just want to kind of shout them out. The first one is at the Canadian Mortgage Awards. I was at that one. There were two categories. We were actually up for the Innovator of the Year and Service Provider of the Year. For both of those, actually, the award went to Scarlett and Joe Fackery, the team over there. So big congrats to them. Here, I'll just share my screen. Here's another just post on that. So you can see some pictures there. There's Joe and Dong for the Service Provider of the Year, and then, of course, Joe for Innovator Champion of the Year. So I won't go through all that here, but it was a great evening. Thanks so much to Canadian Mortgage Awards for putting that on, and congrats to the Scarlett team for that well-deserved victory. The other one that came out recently, I guess the other award ceremony, was the Mortgage Awards of Excellence. And for those of you that were there, you probably know where I'm going with this, where it was actually us, BluMortgage, after I think this is our 5th year doing it, being up for the award. We did win it this year, so it was amazing. Unfortunately, I couldn't be there. I had other obligations, but our team was both Rohan, who's a new member of our team, and Mariah, who eventually accepted the award, did our speech, and has been with us for a long time. We're there. They said it was an amazing evening. We had a ton of fun, and just a huge honor. So thank you so much to the Mortgage Awards of Excellence for nominating us, for eventually choosing us. But ultimately, the thank you, I think, goes to our clients who believed in us early on. But more than anything, I think right now what I want to say is thanks to the team. They day in and day out work to make BluMortgage what it is, a great platform. So as I have the big statue here, you can see it's pretty cool, actually. For anyone who hasn't seen it up close, it's very well like blown glass. Do you blow glass? But in any case, you can see it's quite intricate, really quite nice. So there it is. But this award, we keep it at the office here because, hey, it's the whole team award, and it's really their award. So thank you again so much for putting on that evening, and thanks so much to the team. Really couldn't have done it without you. So we'll leave it at that. Thank you so much for listening this episode. If you do have any comments, questions, leave them in the area below, and we'll see you next week.